Gold is now maybe about $25 higher than it was a month ago when the GDX and the GDXJ hit record highs. And now the gold has made a new record high that eclipses that high a month ago. The gold stocks haven't done it as well. I think, we're going so much higher than the current price. Whether you buy at 2,500, 2,400, 2,300 is immaterial. What is material is if you don't buy at 2,500 because you're waiting for 24 or 2,300 and you never get it. And the next thing you know, we're at 5,000. And then you're like, well, I'll buy a pullback to 4,500. Well, then just buy it now, right? It's a lot cheaper than buying it a lot higher.
Peter Schiff, a notable financial commentator, highlights a remarkable development in the world of gold. Since the dawn of the 21st century, gold's value has skyrocketed. In January 2001, the precious metal was trading for under $300 per ounce. Fast forward to today, and it has surged past $2,500 per ounce, marking an astonishing increase of about 8.3 times. This surge underscores gold's enduring strength as an asset, especially during economic uncertainty and inflation. Recently, gold peaked above $2,500 an ounce for the first time. This surge is partly fueled by expectations that the U.S. Federal Reserve might lower interest rates in its upcoming meeting. Meanwhile, recent data shows a significant slowdown in U.S. home construction, hitting its lowest point since May 2020, at the pandemic's start. The construction slowdown adds to the prevailing economic concerns and inflationary pressures. In response to these conditions, money markets are now predicting a series of rate cuts totaling 0.75 percentage point by the end of the year. This anticipation and a strong rally in global stock markets have driven gold to its recent highs. Despite this impressive performance, Schiff notes that gold mining stocks have yet to reflect the rise in gold prices fully. For instance, while gold itself recently set a new record, indexes like GDX, Gold Miners ETF, and GDXJ, Junior Gold Miners ETF, have not exceeded their previous highs from a month ago. Typically, mining stocks would lead the charge in a robust bull market for gold, thanks to their leveraged exposure to gold prices. Investors often push these stocks higher, expecting future gains and increased output. However, mining stocks may trail behind gold in the early phases of such a market. This delay is often caused by skepticism about whether the gold rally will last, which can hold back mining stock performance until confidence in the market strengthens. We will present clips from Peter Schiff's interview. But before we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell so you never miss any of our videos. We appreciate the support and hope you enjoy the video.
I think Bitcoin is down about 37% over the past 3 years in terms of gold. Nobody is talking about this new high. And really, to put it in perspective, think about where gold began this century or even the millennium, right? On January of 2001, gold was still under 300. So gold, so far this century, it's been about 24 years into it, right? It's risen eightfold, more than eightfold, 8.3-fold, maybe a bit more. Contrast that to the Dow Jones. The Dow was about 10,000 when the century began. It's about 40,000 now. So the Dow's gone up 4x, gold's gone up 8x. Now, sure, the Dow has paid dividends. Gold hasn't. But as far as price is concerned, the Dow has lost half its value priced in gold over those 24 years, even though the nominal price of the Dow has gone up fourfold. But I think that the trend is going to accelerate. I think gold is going to go up more than eightfold over the next 20 years. In fact, it could do that over the next 5 or 10 years. Because the amount of inflation that has been created over the last 5 or 10 years dwarfs what we created during the first 5 or 10 years of the century. And we're going to create even more over the next 5 years, regardless of the outcome of the election. I'm going to talk a little bit more a bit later about what Kamala Harris is promising, which is all highly inflationary. and extremely good for gold. Also, if you look at what happened in the mining stocks, they were up this week about 5%, a little over 5%, which is, not too shabby for a week. But when gold is up 2.6% to an all-time record high, you would expect a bigger move. In fact, the gold stocks as an index, as a group, did not make even a new 52-week high this week, let alone all-time highs. There were a few stocks that we own for clients in our managed accounts: Agnico Eagle, IAM Gold, I think Alamos Gold, also Barrick Gold, interestingly enough. Those four stocks made new 52-week highs. I'm not sure other ones. Interesting, Barrick is the one that got downgraded to basically a sell right at the bottom in March of this year. And now it's at a 52-week high. So there were some individual names that made 52-week highs. But if you look at like the GDX, the GDXJ, those indexes still need to rally about 2.5% from here to make a new high, which they set a month ago. But when they set that high a month ago, gold never got above 2,500. The high back then was maybe about 2,480. So gold is now maybe about $25 higher than it was a month ago when the GDX and the GDXJ hit record highs. And now the gold has made a new record high that eclipses that high a month ago. The gold stocks haven't done it as well. Normally in a bull market, you would see the gold mining stocks leading the miners because, they anticipate the rise of gold. Stock markets are forward-looking. Stock investors are looking at future earnings, and they're factoring in the future price of gold. So normally in a bull market, the gold stocks would be leading the metal, except when you're in the really early stages of a bull market. You see, then there's a lot of skepticism. There's a lot of fear and doubt. People don't believe the rally. And that's what we have now because we're early. We're at 2,500 gold, and the bull market is early. Because if we were later in the bull market, the mining stocks would be leading. But that's going to happen.
Recently, mining stocks have started gaining attention due to a renewed surge in commodity prices, particularly gold and silver. With lingering inflation fears and economic instability, investors increasingly consider precious metals as safe haven assets. As gold prices remain strong, mining companies are slowly seeing their stocks rise, though many remain undervalued relative to the soaring metal prices. Several key players in the mining sector have reported higher earnings in 2024, driven by the increased demand for gold and silver. However, despite these promising signals, mining stocks haven't fully caught up with the commodity's momentum. Mining stocks hold a compelling and often overlooked opportunity for investors seeking outsized returns. Despite gold's dramatic rise, more than eightfold since the early 2000s, many mining stocks remain surprisingly undervalued. Several of these stocks are still trading at levels lower than they were over a decade ago, even though gold has reached record highs. This disparity between the soaring price of gold and the stagnant performance of the companies that extract it highlights a significant disconnect in the market. For savvy investors, Peter suggests that this presents a glaring opportunity to capitalize on stocks priced as if gold were worth far less than it is today.
If you are a risk taker, which I am, you want to have more mining stocks because these stocks, again, are so undervalued relative to the current price of gold because investors are waiting for gold prices to fall. Plus, also, the cost of mining has gone up a lot. And every time one of these mining companies comes out and they miss their earnings because their costs are up, the stocks get absolutely killed, right? Any bad news and a stock gets decimated because that's how little conviction the gold stock investors have. They're so scared. And even when, you beat earnings, the stocks go up, but not nearly as much as they should. But I think what's going to happen when you get a huge move up in the price of gold, I don't care if the costs go up. It's not going to matter because they're not going to go up anywhere near as much as the price of the metal because there's so much pent up upside that we have. I think, one of these weeks we could see gold up $500 to $1,000 in a week, right? I want to make sure that all of my listeners have all the gold they need and all the silver they need before we have that week, right? And no point waiting. I'm sure I'll get new customers then, right? When gold really starts to move, people who haven't been following me, who've never bought any, yeah, they'll eventually show up and start buying. But I want all the people who are listening to me now to already own gold. Don't wait or silver and buy it higher. But getting back to the mining stocks, this is where the big gains are going to be. Because I talked about how the price of gold is up eightfold since the year 2000. There are many gold stocks that are lower than they were 24 years ago. I mean, I own some of those. Now, I also own some that are way up, but as a group, they're not up that much. I mean, most of them are above where they were in the year 2000, but the majority are below where they were in the year 2011 when gold topped out at 1900. Most gold mining stocks are well below where they were in 2011. So these stocks are very, very cheap. They're not going to stay cheap forever, right? And while they are, you got to take advantage of it by buying them. And you want to get your positions in these mining stocks as soon as possible before the world wakes up and realizes how cheap they are. Nobody is paying attention. Again, they're not talking about it on CNBC because the average investor couldn't care less about these stocks. And so CNBC doesn't even bother to cover it. Why are they talking about Bitcoin all the time? Well, because that's what their listeners care about. That's all their advertisers are advertising Bitcoin or others cryptos. Nobody is talking about gold, right? Well, that's when you want to buy it, when no one's talking about it, right? By the time everybody is talking about it, the price is going to be much, much higher. And by the time your typical, portfolio manager, whether it's a mutual fund or a hedge fund or some of these pension plans or endowments, by the time they start buying these gold stocks, it's going to be because they are way, way up. That's what's going to put these stocks on their radar.
The outlook for gold prices remains bullish in the short term, supported by a weakening US dollar, expectations of an imminent rate cut, and ongoing geopolitical risks. Should the Fed proceed with a rate reduction in September, and if geopolitical tensions persist, gold could continue to test new highs. If you found this message compelling, please share your thoughts in the comments below. If you enjoyed this video, give it a thumbs up, subscribe to our channel, and turn on post notifications for more thought-provoking content. Thank you for watching.